Right, good afternoon. Let's start. So we had 2 weeks of weeknight lectures, one because of the long weekend, and as we decided earlier, we thought we'll let everyone go off and do anything that they wanted. And the other, I had some work, I had to go to office, so that's why we ended up with 2 weeks of weeknights. But anyway, we covered very important topics over those lectures uh, that will definitely be coming for the exam. And it was a kind of heavy lectures that we had last week on the legal framework. So those that will be one of those. So for those of you who couldn't join, I recommend that you join the you look at the recordings as well, because there are those cross-cutting topics that will probably be asked in many questions. So most of the time the model is per topic. You have a question, but here the past week's one on the legal framework, that could get spread across questions. So it's good if you take a look at that. I think it'll be helpful. Yeah, so today we are going for our topic. Now we finished. Let me just share the slide. Are there any questions or anything so far from what we've learned? Anything that you all want to clarify before we move on? So you all must engage more. We are going very fast on the lectures. Of course, I have added more new lectures to the course, but we are going really fast because because you all don't engage a lot. So actually, this today we are doing the 4th lecture, but I'm actually covering the 6th lecture from last time. So we're going really fast. So I hope that you understand, because the questions will be from the understanding that you understand, right? So if you have any clarifications, just ask. And not only the questions, just as I said at the beginning, this is a very practical subject. You have to bring in your experience and just cross-check it with what you're learning, and share your experience with others as well. That's the way everyone can learn. Because in practice, there is the standard or the theory or the law, and then there is how it is actually experienced by different people. So that is how it becomes useful. So the more you engage, the more beneficial it is, not only for you, but for everyone else as well. Proceed. Present. Okay. Can you see the screen?
Yes.
Okay. So we finished up to this point, right? So today will be sort of a lighter. It's a lighter topic in terms of having to understand concepts, unlike the previous topics which were legal framework. Of the legal framework, last time I had another lecture with all the other laws. Let me just show you. That was so last year, but because you said that you had so all these laws, Banking Act to such as the data protection bill, but because you said that you have a separate legal environment course, I thought I will not do it. Are these areas covered? I don't have the syllabus of that course. If you would like me to cover this, I can, because last time I covered all these other acts as well. This time I decided not to, just so that we don't repeat I don't repeat something that you have already learned. Will you be covering these, or do you, because these are also applicable laws to this course? Would you know whether you are going to cover these areas? Now, we covered these two, the first two, and the others I'm talking about, the ones in black.
I'm not exactly sure, Miss, but I guess most probably will be covering most of it. I'm not exactly sure because some, like the Banking Act and the Bills of Exchange, those were there, but not sure about the rest yet.
Have you finished the legal environment course? No.
We are just having it.
Okay, so it's going parallelly. So okay, so Banking Act, Bills of Exchange, I think definitely it'll be there. AML CFT, you might be covering from there as well, I'm thinking. Yeah, so we'll let that be, and if you don't cover them, yeah, so what I thought was the data protection bill, I will fintech. I will introduce the data protection bill to you because that is going to be quite important. It's still not passed in Parliament, but that's going to be pretty important going forward for the banks, as well as when you connect with third parties or when you allow IPGs, when you connect with fintechs, when those sort of new relationships happen between banks, the data protection bill will be important. So I will cover that when we are doing fintech, because I think it'll be more useful there, because there are some new concepts like automated decision making and third party data processing and all of that. So I think it'll be more useful there. So I'll do that there. So I'm just going to, then all these, I'm just going to assume that you will be learning that in the legal environment course. There's foreign exchange as well. And if you aren't, and if you feel that you want to, anyone, it's fine. You can just let me know, and I'm happy to do a quick, because the slides are already there. It's a full lecture that I had last time. So it's a full 4-hour lecture, but I can just bring it down and probably cover it in about 2 hours if you want. It's not a problem. Right. So today we are going to do the systems themselves, right? So we covered the legal environment, and now we're going into the systems itself. So, as you know, I think you already know this. We have large value systems and retail payment systems. So, can someone tell me what is the difference between a large value system and what is large and what is retail in Sri Lanka? What is the general value difference? Think of the systems that you all, there's slips here, there's thefts. Think of the maximum value limits that you all have for these, and then from that you can guess the difference. Any guesses?
Rupees 5 million, the benchmark for the cutoff mark.
Yeah. So, I mean, there is nothing, nowhere is it written retail and large value. It's not defined. But to right now, as you correctly said, sort of 5 million is 5 million and below is what is considered retail. A per transaction value of 5 million or below is what is considered retail, and above is considered large value. And that's kind of the way that the systems are not designed, but kind of organized. And I think banks also organize their transactions accordingly, and now even customers, because thefts, you have real-time high values. Therefore, you can do a fairly sort of big transaction through thefts and at a lower cost. So I think there is a shift of the types of transactions that come. Have you all seen any such shifting of transactions in your day-to-day work? Things that used to come for RTGS now going through thefts, or slips going through thefts?
Yes, ma'am. Actually, earlier, most of the large value transactions were routed through RTG system. With the introduction of SWIFT, I think the customers have moved to that, and they always use that now more than the RTGs.
Yeah, and I think not all banks give online RTGS facilities, but all the banks give SIFs facilities, so the customer has more control and there are no cutoff times or anything like that. So I think SIFs is for the average, even for the average SME, SIFs is more than enough. And most banks end up giving about 1 million, 2 million. So they can sort something out. Right. So, importance of payment systems, right? I found this quote from Alan Greenspan, who was the chair of the Federal Reserve up to 2006. So, why do we have to study about payment systems? So, he puts this nicely. He says we'd always thought that if you wanted to cripple the US economy, you'd take out the payment systems. Banks would be forced to fall back on inefficient physical transfers of money. Businesses would resort to barter and IOUs. The level of economic activity across the country would drop like a rock. And this is true. And this is true not only for the US, this is true for even Sri Lanka and most countries that are going that have digitalized payment systems, because I think you know this from your experience how much the customers, even the SME customers, they have changed So even though they have day-to-day cash-based transactions, retail level at their stores, they will do a lot of digital transfers as well. So there is like bulk payments, paying suppliers. So that whole process, once you get into the system, there's so much of the value chain changes, your supply chain changes, how fast you need to pay, how fast you need to order, your stocks, how fast you need to keep, how long you need to keep your stocks. All those things change. One with transport, other with storage facilities, and the other with payment systems, right? Like if money can move around fast, then more transactions can happen. That means goods and services move around a lot faster. So now for instance, a very simple thing, like those days, if we wanted, let's say, like a cake like a custom made cake for a party, we have to go and pay. If we can't go to the shop and make a down payment, we have to go 3 days ahead and go to the bank and deposit the money. And so at least you need 3 days in advance to want to get a custom made cake. Now you don't need to. If the person can make it in a few hours, then that holds, so that you can just transfer the money immediately. So it's now it has come to a point in Sri Lanka, for many people, transferring money is, it's understood that it's real time. So there are some people I send money to. They sometimes go to the bank, because they don't have, they don't even use ATM cards. They go and withdraw the money from the bank, and they sometimes go to the bank and they call and ask, where can you send the money? And even for them, even for the lower economic classes, this idea of real-time transactions has become a norm for a lot of them. So when you kind of get used to that, it becomes a sort of an essential service. So then that's how uh, you can bring down entire economies by taking down the payment systems. And a lot of things like Central Bank and the banks and Lanka Clear do a lot of things to make sure that doesn't happen. Right. So what is an Rtgs system? So it's electronic and computer-based fund transfer and settlement system. So processors and effects final settlement, right? Very important, final settlement of each large value and payment instructions individually and immediately on a real-time gross basis, right? So there's no waiting period, and it's settled one-to-one without bundling or netting. And settlement, once processed, it's final and irrevocable. We discussed this when we were discussing the Payments and Settlement Systems Act and the Multi-Law Act. The requirements for the Rtgs provisions in that law, it's in the law itself that the payments are final and irrevocable. Because if payments aren't final and irrevocable, we practically can't have a system like this working. Like, it doesn't work. If you can revoke the payment, or you say, oh, I'm sorry, I that was my mistake, I want the money back, the system can't work. It will become inefficient, and people will lose faith, and they will just stop using it. So there are a lot of rules that have been brought in to make it as efficient and final as a cash transaction. If you don't want the payment and you need it reversed, it becomes another transaction, right? Revocation is another transaction. Do you all have cases where customers make Rtgs payments and then want to reverse it?
Yes, there are.
So what do you all how do you all get about it?
Right now, I'm not sure whether it comes through RTGS or SEFT. This is mainly with regard to online transfers done between banks, right? So I think it might be SEFT or RTGS. Whatever the reason, one of the main issues is crediting wrong accounts, like
Yeah.
mistakes in because I think the system does not identify the account name and number and all. So
Exactly. It only goes
main,
to yeah.
main issues that we face is crediting wrong accounts and reversing it back, which takes a whole lot of long process. Like it takes time because right now what we do at our bank is we need to get the consent from the account holder where the credit has gone to reverse the transaction. So since this is a erroneous transaction, people are reluctant to reply to our correspondence or calls or whatever. So we'll have to go behind them and get the confirmation before reversing it, and it takes time. Normally, I think it takes almost about 1 week.
Yes.
Definitely
And
about 1 week.
if you can get it done in 1 week, it's good. Others, yeah. Any different experiences? So this is a problem right now. We are also aware of this problem because now everyone is getting used to doing online transfers, but they, as you said, the system only sends it to the number. So now you don't even need the bank branch name. You just have to send it to the account number. So once it goes, it's very interesting how people, I mean, the person who gets the money erroneously knows that they are not supposed to get that money, right? But it's it's interesting how people are reluctant to give up money that they know is not supposed to be theirs. So that's a very that but and that's a human nature issue. That's a human. I mean, if you're a honest human being, you will just say yes, of course, take it. It's on mine. I actually know people who you also get other. I don't know whether you all have experienced customers that we have had people like that calling us, and where they have noticed that money has come erroneously to their account, and they go through a lot of trouble to send the money back. So you do get individuals like that as well, but I think uh, there's a majority who would rather keep the money that came to them erroneously. And I think the other situation is sometimes they've already spent that money, so there is no money to be reversed. Is Have you all had cases like that?
Normally, what happens is like I think when our head office get to know the erroneous transaction, immediately they put a hold on this account, whereas the customers are not able to withdraw. But we are that written confirmation is required to reverse it back. For the time being, we have placed holds so that they can't withdraw it. So I haven't come across situations where the money has been withdrawn, but it is a possibility. I don't know how in that case the insurance or the procedure that should be followed.
Yeah, so these are some of the issues. I remember in the UK, it's when things are just to make the thing work properly, even for credit card transactions and these sort of things, they just settle the customer because to just keep if they know that this is not a fraudulent, if it doesn't look like a fraudulent thing, but it looks like a genuine error, then they just settle the customer, and that is not a solution to the problem, but they just do it so that the system continues to work efficiently, and the time that they spend trying to get the other customer to reverse, the time and the money that they have to spend to get that is it's sometimes cheaper to just pay off this customer and forget about it. But that is not the solution, and we have to figure out how best going forward, how best to either have a lot of customer awareness to correct this, or have some system with holding the freezing the funds is a good measure that also has not gone, not come. So in the meantime, someone can pull the money out. Yeah, so these are the practical issues, I think, when we go into digitalization and automation. And that we all need to sort of figure out how to solve it. And I think everyone tries to put some sort of controls as we go and as we try to reach a more sort of a stable solution. Yeah. Right, so net versus gross, I think all of you know this, but just to remind you what gross is. Gross means the one-to-one settlement. So A owes B 100 million, B owes A 50 million. In gross settlement, there will be a single transaction going from A to B of 100 million, and then from B to A for 50 million. And in net, there will be only one transaction of bank A to bank B of 50 million. You know this, I think all of you probably know this. Right, so in Sri Lanka, the Rtgs system is the only large value payment system. And so it was set up in 2003. And this also includes the Lanka secure system. It connects with the Lanka secure system, which is the government securities, that is T-bills and T-bond settlement. And the whole thing is known as Lanka Settler. We've sort of mentioned this before as well. So the monetary obligations and the security and the payment leg of the security transactions, because when you buy or sell a treasury bill or bond, the primary dealers, they need to settle the funds. So that settlement comes to the Rtgs. Sorry, this structure is a common structure for Rtgs across the world, because these are large volumes and it just makes sense to settle it directly through the Rtgs rather than going via banks or another third party. So the reasons for using Rtgs, there is less credit risk for participants, less impact to other participants in the event of a failure of a participant during business hours, failures to pay, right? What does that mean? Can someone tell what that means, the less credit risk for participants? This is something in comparison with the net payment, the clearing method. So net is where the payments are cleared and settled later. Can someone explain? Does someone know? Can anyone just even guess how this credit risk becomes less for the participants?
Since the transactions are settled on individual basis, each transaction get completed as and when, and otherwise, if with a batch or with pooling of transactions, if something happens at that end, all the transaction will get held up because of technical.
Yeah. So when you have to that's exactly what you as you explained. So when you have to pay and you say, okay, I'm going to pay later, there is a chance that by the time later arrives, that time which you say later, whatever the 3 o'clock, 4 o'clock, you might not have the money. And then that becomes a big problem. So that's why the exposures are less when you individually settle. So this is the main reason that you have the concept of real-time gross settlement systems in the world, because large value transactions, the exposure is more. So when the exposures are more, you might as well have it settled immediately rather than bulk up many large value payments until the end of the day. Then you have participants get full control of their own accounts and customers' payments and better liquidity management. Can efficiently manage the growth of the volume of transactions. And there is better public and investor confidence due to less risk and high efficiency. Because of the speed and the fact that there is less risk, people have more confidence. And we see this as even at a customer level, we see when SEFs is working properly, how people are using more and more SEFs, because people, when you have that confidence, you tend to use it more. And of course, there is no physical exchange of money, and these we are talking very large amounts when we come to RTGS. So features of the RTGS system: payment orders can only be initiated and submitted by paying participants. The central bank can debit and credit participants' accounts because the central bank is holding those accounts. So payment instructions are executed on first in, first out basis. The payment gets queued. Like sometimes, though it is RTGS, sometimes because these are large values, the payments do get queued. And because we want the thing to work, we don't want sort of block payments. So practically, the payments do get queued if there isn't enough sufficient funds, and we inform the bank, okay, there's an issue with the funds, sort it out quickly, and they're given a time to figure that one out. And we want to sort of make sure that the payment goes through.
Excuse me, ma'am. Here, participant means banks, right?
Bank. So there are calls coming practically. I mean, there are calls that come in, and because the thing has to work. The payer can change the payment order by changing the priority. That option is available. And need more liquidity to settle payment by payment on gross settlement. So therefore, there is something called an intraday liquidity facility provided by the central bank. So we take you take the treasury bills as collateral, and we have it injected. It's intraday, right? And it's intraday because if you keep it overnight, it goes into the system. The money goes into the system. This is central bank money. So basically, we give our money to settle, and then we take it back that day itself, so that the money supply doesn't get affected. And it's just, we are using our money to we are giving out our money. We discussed this when we were in the second lecture, which we were doing the institutional framework, so that the payment system is functioning smoothly. The stability of the payment system is very important, and also monetary price stability and financial system stability. So what we do, the interventions that we do here is kind of isolated, and we use the facilities that we have to make sure that it works smoothly, but with minimal effect to the rest of the economy, because the effect to the economy through the payment system should be the main transaction and not ancillary transactions that are made to sort of facilitate the main transaction. So participants can monitor the status of their account. So unsettled transactions get automatically deleted at the end of the business day. So you can queue them, whatever, but for that business day only, right? and participants can make forward dated transactions up to 10 days as well. So Rtgs system in Sri Lanka, it's the software vendor is the same as the UK system, which is CGI UK, and in 2003 we use Swift, and it's owned and operated by the central bank. So the business hours is 8 to 4:30 and customers 8 to 3. In October 2020, we reduced the transaction fees. So we reduced the per transaction fee of a participating institution from 450 to 200. And the payment institutions, PIS, that's not please, but PIS, can charge a maximum of 400 from the customer. I have missed the most important word there. So it's a maximum. So the bank has the discretion to either charge nothing if they want from a customer. It's up to them. But we do have the ceiling so that it's not. It was reduced from 1,000. It used to be 1,000, but with CEFs and overall now there are many more alternatives. So the transaction fees have come down. One reason of having a higher transaction fee for Rtgs is because we wanted to encourage the high value transactions to come. So your relative charge, if you take it in terms of a percentage, is low. But if you have a low transaction fee, then people won't distinguish it. Even for small transactions, people would have used Rtgs to even for like below 5 million transactions, and that would have put a lot of pressure on the system. And then this system has to be available for the large value transactions. And for the clearing files, there are many clearing file batch clearing files that come through the day. So for all that, the system has to be available. So that was the reason that the price is kept higher. But I mean, still the price is relatively higher, but now it has been brought down with the developments of the rest of the payment system.
Hello.
Yeah.
In simple terms, this Rtgs settlement is done at central bank between the accounts maintained by the banks at the central bank, is it?
Sorry, can you repeat that?
The settlement of this Rtgs is done at central bank between the accounts maintained by the banks at central bank, is it?
Yes.
The transaction.
Yes. So
for each and every transaction, the entries are passed against these accounts, is it? Oh.
Yes, so that's the thing. So there are only not all transactions. So Rtgs has no minimum value, right? You can even make a 1 rupee Rtgs. Like technically, you can make a 1 rupee Rtgs transaction. That's not a problem. But you have to pay 400 rupees or 250 rupees. That's why it becomes. That's why you won't make like a 1 rupee or even a 400 rupee transaction unless it's absolutely urgent. So each transaction, yes, per transaction. So there are types of Rtgs transactions which are very common. We'll look at it in the coming slides. And they're kind of limited to those mostly, and that makes it more practical. So not each and every transaction of every bank, the larger transactions are the ones that go to settle on the Rtgs system. So the participants in Sri Lanka's Rtgs, we have central bank and all the commercial banks. So far, only commercial banks are members of the Rtgs. Primary, not other specialized banks. Of course, that option is being considered at the moment. primary dealers and the EPF and the CDS, right, of the Colombo Stock Exchange. So these are the types of RTGS transactions that get processed, right? So as I said, there are so many types of transactions that are outside what normal customers do. So because of that, there is a lot of activity that we don't see at an individual level or even at a branch level that happens with in the banking, the interbank transactions that happen throughout the day. So there is repo, that is the open market operations where the banks lend to each other through the central bank systems, and then you have the ILF, and then so interestingly, in Q3 of 2021, there was a drop in the ILF requirements in terms of volume. Then you have the central bank monetary policy stand-in deposit facility. That also has been a drop. So that means they have parked their money less at the central bank. Then you have interbank transactions, customer transactions, which is about 12% quarter on quarter. And then clearinghouse transactions, that is all the clearing files that come. And then you have certain internal fund transfers. Then you have miscellaneous transactions, including repeat settlements of central bank foreign transactions. You can see we transact in trillions throughout the year. So there's a huge amount of money. Basically, as I said last time, all the money eventually sort of finds its way to the RTGS system. All transactions eventually come to the RTGS system in one way or the other. So the per day transaction in Q3 is 1.2 trillion, 1.3 trillion, right? So it's a large amount, and we can see that it has continued to increase. Look at the quarter on quarter increase, almost 100%, right? So it's becoming very more and more digital transactions are being used. Right. So just a breakdown of what we saw. So interbank, consumer transactions, then you have open market, the DVP transactions, manual fund transfers are also there. Then you have the multilateral net settlement batches of Lanka Clear. Do you know what multilateral net settlement is? Does anyone know what multilateral net settlement is? So we talked about net settlement, right? Which is Lanka Clear, all the transactions that are not, all the non-RTGS transactions, right? All the even SEFTs, right? SEFT is also non-RTGS. Transactions go to Lanka Clear, interbank transactions go to Lanka Clear. And once they go to Lanka Clear, then Lanka Clear looks at the obligations between all the banks, right? So multilateral means it's not only between two banks and then the other two banks and the other two banks. They net it against all the banks, and that is what it is, multilateral. Multilateral is the fact that all the banks are being taken into consideration, and so they send the batch files for settling all the banks at once. Yeah, so those are sort of the main transactions that happen in RTGS. So the year-on-year growth, so 2021, we don't have the final quarter numbers released as yet, so the 2020 numbers are here. In 2020, there was a dip in volume, but still a growth in the value of transactions. We believe this might be due to the COVID situation that we had. You won't see sort of like very rarely will you see huge growths in RTGS. It will reflect the general trend of a cross between inflation and GDP growth. Because these are overall the growth rates. You will see a slight, it's this is not sort of a research thing that I'm saying, but if you look, there is a slight sort of a similar pattern that goes, because these are all the main transactions of the economy that come here. So you will see that sort of trend with inflation and GDP. You can just see a slight not a correlation, but they will be moving in a similar direction. So if we look at RTGS, so in terms of participants, local banks, in terms of volume and value, local commercial banks engage in most of the transactions. Then you have foreign commercial banks. The volumes are actually more than double the value. That means they conduct relatively smaller size values, but higher volumes. That means a lot of their transactions go via RTGS. And then you have the primary dealers, and then the central bank. So SDF, ILF, and all of those fall into central bank transactions. Right, facilities available for participation funds. These are just things that they see on the screen and things they can do on the system. I suppose you all, any of you have worked with the RTGS systems from the bank end? Right, so these are sort of the things that you can see. You can view the balance of all the debit credit transactions, and then you can see what you have queued and cancelled, and basically everything like what you need to use a system is available. And then facilities available, you have interbank fund transfers, cash withdrawals from the central bank, that is also a facility. And then a statutory reserve adjustment. So you need, the banks need to hold what is called that statutory reserve requirement. So if that amount is not fitting, based on, I think it's calculated on a week's average, then you can make that adjustment from your RTGS. And then money market settlement, this is what we saw about the repo. Then the SLR leg of the foreign exchange, and then scriptless securities settlement. So we are looking at upgrading the RTGS, and there are some proposed developments like hybrid pricing mechanisms, and transaction history, and several other developments that we're looking at for the RTGS upgrades. Right, so RTGS, I brought in this example of UK's RTGS experience to give you an idea of like why we are studying it in, I mean, practically, when we are, as a bank, it may appear to you, okay, RTGS is, okay, if a customer wants to send a very high value over 5 million, or I think you can calculate with your CEF's charge what is the break-even point, and send an RTGS, and it needs to be done before 3 o'clock or 4:30, those things. But the importance of RTGSs running properly and I think the onus comes on everyone who's using it because everyone is connected to it. If it breaks down, it can have like really bad repercussions on the economy. Fortunately, touch wood, we haven't had such a situation in Sri Lanka. We've been able to sort of pull it through. But in UK, they had this experience of an RTGS outage for 9 hours in 2014. And I just wanted to share this experience with you so that you have an understanding of what is meant by systemic risk. And systemic risk, not level of the financial crisis, but a day-to-day when a payment system, when a systemically important payment system crashes, what that really means, right? So this is like a big deal because it was out for 9 hours, and we are talking about the RTGS of UK, right? So UK is a global financial hub, right? So many transactions, their stock exchange, the international stock exchange, so many transactions go through UK's RTGS. So this RTGS being out for 9 hours is so much more big deal, but it is an idea. It is a sort of an example of what could happen to any economy, right? So following the restoration of the service on the same day, the governor of the central bank, Mark Carney, at that time apologized for any problems caused by the outage and announced an independent review into the causes of the incident, right? And the effectiveness of the bank's response and the lessons to be learned, because this caused such a big outcry, right? Gone for 9 hours. That the governor of the central bank had to come out and apologize to people and, and promise to do an independent review to find out what happened, mainly because they wanted to ensure that it doesn't happen again. Because if it happens again, people will lose faith in the system, right? And they could lose their strength as a financial hub if their payment system is not working, right? So this is very important. So the root cause of the incident was the introduction of defects as parts of the functionality changes, right? So there were defects in some of the functionality changes that were made to the system, like in upgrades in previously in 2013 and earlier that year, right? So the worst part of this was in UK, most of the residential property sales, the house sales, happens on a Monday, and this outage happened on a Monday, right? So this is a big problem because there are very few people. You have to complete the transaction on the right day, or you could even lose the house that you have decided to buy, right? It's quite a concern. It can be a tight market sometimes. So using survey results, it was approximated that about 700 transactions may not have been completed until the next day or after because of this outage, right? At the point of the RTGS failure, many payments to the CLS is a cross-currency clearing system, had not settled, right? So pre-agreed manual contingency arrangements were used. So that is the backup, right? So in every system, there is a backup, resulting in CLS sterling payments in being completed satisfactorily, but the service levels with too early closings, that's the Asian markets, were however breached by 1.5 hours, right? Of course, there were no financial penalties incurred as a result, right? Because everyone kind of understands, okay, this is everyone's nightmare, but it happened. All submitted payments were settled within the day's operating hours. So what happened was you have to have operating hours. So now when you close, now I said the cutoff time is 3, the cutoff time is 4. RTGS on a normal day, RTGS closes at 5, right? I think it's the same in the UK. So once you close the system, you can't open the system for that day. That's kind of the rule. Otherwise, that is to prevent fraud and any sort of systemic risk issues. So if you are to extend the work, the operating hours, you have to officially extend it. So what they quickly did was they extended it to 8 p.m. And with that, substantive risks to financial stability and financial loss and long-term damage to the economy were avoided, right? Through the execution of a comprehensive plan, right? And then this kind of became a turning point of it opened up a lot of the problems with the UK's RTGS system, where it's older than Sri Lanka's one, and it had a lot of legacy systems connected to it. That is, old computer systems and certain sort of architectural issues that were risky, and that was what gave way. And then the new system, they kind of renewed the RTGS system, allowing non-banks also to get access in the new architecture, right? So then they started renewing the UK's RTGS in 2017. There was a blueprint and of the new RTGS. And in 2017, the Bank of England said, okay, in the new RTGS, we are going to allow non-bank payment service providers also to apply for a settlement account, right? So right now in Sri Lanka, we don't have that. Not even specialized banks, right? Only LCBs can have settlement accounts, because they are the ones under the Monetary Law Act who can have accounts with the central bank, right? And those accounts are there. Those accounts were originally there not for payment services. Those were originally there for monetary policy, because for statutory reserve, and then to do the interbank repo markets, to manage the interest rates. Those were the reasons that those settlement accounts were there. Only in after the 2002 modernization were they connected to the payments and settlement systems, right? So now settlement accounts serve two purposes. They serve the monetary policy purpose, and they also serve the actual payments and settlement system settlement purposes. So because of the rise of fintechs and a lot of third parties joining the payment ecosystem, and they also wanted settlement accounts, because there can be a delay when you go through another bank, right? And they wanted settlement accounts so that they could also experience the efficiencies of the RTGS system, right? So this change enabled non-bank payment service providers to access directly the UK's payment systems that settle with central bank money, right? That is faster payments, which is similar to SEFs, BACS, which is similar to SLIPs, CHAPS, which was the operating name for the RTGS, the scheme name for RTGS, LINK, which is CAS, and so I'm giving you the Sri Lankan equivalent. So LINK is the Sri Lankan equivalent is CAS, the common ATM switch. And then Visa, which is also connected to the main payment system, and their new digital check imaging system. So their digital check imaging system is very recent, unlike in Sri Lanka, which is much older. So all these systems, they settle with the central bank money. So they, with central bank accounts, so with the PSPs getting the settlement accounts with the central bank, they could directly participate in all these systems, right? Until that time, they had to go through another bank, like which is the case in Sri Lanka. So in 2018, the first non-bank joined, that was TransferWise, and they had to meet the requirements of, so they are not coming under the central bank, the Bank of England. They come under what is called the Financial Conduct Authority, but they have to be regulated in a manner so that they can not create any systemic risk to the banks. So what they have, so TransferWise, even though they don't have a settlement account, to get the settlement account, they need to keep a certain capital with the central bank, and they needed to upgrade their systems similar to those of banks, so that they don't create any risk to the RTGS system by joining. So if you're weak from your IT side, then you can't join. You need to have the capital as well as very strong IT systems to connect to the RTGS directly. And that's a huge investment. So I think it's only TransferWise who has joined so far, even though there were a lot of fintechs in the UK. The investment is too much for them. For banks, it makes sense because they use it for many more purposes, and it's also a statutory requirement. Right. What is this? Is this a repetition of that? No. What happened? Okay, I went the wrong way. Sorry. How can a PSP join? A settlement account is not a traditional commercial account. So the settlement account is only used to settle payment obligations, right? So as I said, because they are not banks, they're not connected to monetary policy. It's just to settle the payment obligations, right? So the PSP still requires to have commercial bank relationships because it is not a bank, right? It is not a licensed bank. It's a payment service provider. So it has to have its usual relationships with the commercial banks, right? And then for the deferred net settlement schemes, they need a relationship with a CHAPS direct participant, right? So they have, now even in RTGS, we have different participant models. So the LCBs are direct participants, and then you have primary participants and secondary participants, right? And they need to have a relationship with the commercial banks to either fund or not fund their settlement accounts. So non-bank PSPs are not eligible to participate in this Bank of England Sterling monetary model, that is their monetary policy and liquidity insurance model, right? Or for intraday liquidity. They don't get those facilities that the banks do, but they have been connected to enable them to enjoy the efficiencies of the RTGS system. And throughout the world now, they are considering this model. I think in India they already have this, where non-banks can join the RTGS as a for the payment purposes. Right. Any questions so far? We'll take a break before we go to the retail systems. Any questions? Anything so far? Right. So let's take we've gone for about 1 hour, and so let's take let's take a 10-minute break and come back 5 to 3. Right, so let's proceed. Retail payment systems. So all the retail payment systems are run by Lanka Clear through the Lanka Pay, except for slips. Everything else comes under their Lanka Pay brand name. Do you know what Lanka Pay is? So Lanka Pay is the brand name for the national payment infrastructure operated by Lanka Clear, right? So all the retail payment systems come under Lanka Pay. Of course, slips and sits not really Lanka Pay, because Lanka Pay is mainly SEFs, CAS, that the common systems. But what they call the entire payment architecture is Lanka Pay. Right, so it includes ATMs, POS machines, internet banking, kiosks, POS, then the bank counter, everything is a part of the Lanka Pay system, either directly or indirectly, right? And then all these systems connect to the bank switch, and then the bank connects to Lanka Pay. It's sent to central banks Rtgs for settlement, right? So all these transactions, as I said, all transactions eventually end up at the Rtgs system, because all these, when they come to the interbank transaction, they eventually end up here ultimately, right? And then from here again, the settlement happens, right? Right. So let's go into digital finance channels, right? So now ATMs, bank branches, mobile money, all of them fall under what is considered digital finance delivery channels, right? Under the World Bank classifications. So these are based on the National Financial Inclusion Survey conducted in 2018, right? It's a very, very big survey conducted by the World Bank and the Central Bank. And they came up with these findings, right? So in Sri Lanka, access to retail, so basically we are starting with access to retail payment systems, because retail payment systems are payment systems for customers, right? So customers need to be able to access them. If customers can't access them, then there's no point in the retail payment systems being there or being advanced. This connects back to what we studied earlier about the mobile phone, the PC, the card, the payment card. Those are all infrastructures that extend to the customers so that the customer can access their bank, their savings or their deposits at their banks without having to go to the bank counter itself, right? But these must be available, right? Right. So in Sri Lanka, financial inclusion is pretty high, right? And we have a lot of financial service providers which have been classified as formal, semi-formal, and informal, right? So there is a wide physical access network, right? That banks, non-bank financial companies, other payment service providers all have created a very wide physical network to access, right? Physical access network. The wide range of FSPs is complemented by the high levels of physical access to banks. So I think it was in 2010. Was it in 2010? I can't remember the exact year. 2008. So after the war, we brought in a rule saying for each branch that you open in the Western Province, you have to open 2 outside, right? So that really made sure that all the, it was in 2008. It's at the bottom of this. So that led to the density of bank branches in the country really improving, so that the access to banks was very high. And this is actually one reason why things like mobile money is not so successful, not so adopted in Sri Lanka, because people have a lot of bank branches to access, right? So according to the survey on proximity and awareness, right? According to the survey, the 5 to 10 minutes, 40% of the households can get to the bank branch in 5 to 15 minutes, right? This one. Right? So that's a pretty high number. So almost everyone can get under 30 minutes. Most people in Sri Lanka can get to their bank branch or get to a bank branch within half an hour. So that's really, really good, right? This is why I said the issue with the problem for mobile money now in Africa, where it was very successful, they couldn't get to a bank branch for days, right? So in Philippines also, where there's a lot of there are a lot of islands, right? So you need to take a boat to get to the bank branch, right? So in Sri Lanka, we don't have that. So within max 30 minutes, you can get to a bank branch. So that means the financial inclusion is quite high, right? So access to financial services. And also, almost 90% can get to an ATM in 30 minutes, right? So this one. Right? So mobile money outlets, now this is an interesting thing. 33% don't know, have never used a mobile money outlet. So you can see how these two are contrasted. This is what I said about mobile money, because the bank branches, the financial inclusion through the formal banking process is so high. This is also through the banking and non-banking sector. So therefore, this goes up. Most people don't know, and some of them probably don't even need to know, right? And because of that, even though the mobile money outlet is supposed to be the closest, right? It's if they are in that, you don't need a bank branch. They can be in any retail shop, any sort of these normal shops that you can buy your groceries and all of that. But they're not, right? So within 15 minutes, only about 30% can get to a mobile money outlet in 15 minutes. So that means that they are not as widespread as the banks, even though ideally that is the outfit that can get closest to the customer, like your shop down the street sort of thing. But that's not the case in Sri Lanka. This is the reason. This is one of the reasons. So there's 2008 directive to establish two branches outside, and also in 2015, the directive to expand access to banking, requiring commercial banks to open branches in remote areas and also open accounts for new customers without requiring a minimum initial deposit, right? So that is very important to encourage people to start coming into the banking network. Why do we encourage, why the central bank keep encouraging banks to go and get people to come into the banking network as opposed to go and open in non-banks or mobile money? I mean, they are all regulated by us, but you can see that there is a slight bias towards the banks. Why is that? Can anyone tell me why that is? Can someone tell what is the big difference between a bank and a non-bank and a mobile money service? What is the difference? What is the difference? Why do people need to come to banks as opposed to go to non-banks? So the reason to join banks is you have more services, more financial services, and from the central bank point of view, the policy connection is there with the banks, right? So we implement monetary policy, our financial system stability policies directly via the banks because they have the settlement accounts, and the interest rates can trickle through to the customers automatically through the monetary policy tools when they are in the banking system, right? The financial service, the non-bank financial services are there for mainly investment and business, sort of to encourage financing, right? Not banking, but for financing, right? They serve a different purpose in the economy. Their purpose is not the same as the banks. So when people come into the banking system, they get different services, so banks are more risk averse than the finance companies, so the rates are slightly different. But there is a lot more there are more services, there's more security, and all those factors are more important to get people into the banking sector, right? Mainly for monetary policy, it's very important to get them into the financial formal sector by getting them into the banking sector. So we encourage people to join banks and do their banking through the banking channels. But of course, now with the evolution of the industries, you can see uh, finance companies also offering very similar products to banks. It's sometimes because they give payment cards, they give different types of loans. So some customers might not really, if you don't need a checking account, if you don't need a current account, then they might just think, okay, let me stay with a non-bank. They might not see the difference because of the evolution of industries. Right. Right. So if we look at access points of banks in South Asia, relatively for every 100,000, Sri Lanka is sort of going at the average of close to 20, right? So Malaysia and Thailand, Indonesia, of course, ATMs are much higher. We have to understand that they are much bigger countries and with much larger populations, right? And of course, we are well above the South Asian average, right? Okay, so now we are going into the CCAPs, right? So in 2013, we launched a system called CCAPs, right? So CCAPs is common CCAPs. I'm trying to remember now. It'll come to me. So the CCAPs project, what it did was it made the interoperability between banks, right? So all these all these are all switches. So CAS, common ATM switch, CEFs, shared ATM switch, those are all the common POS switch. Those are all under the CCAPS project, right? Right. So the common ATM switch basically means that all the ATMs are connected. So it was launched in 2013, and most of the ATMs are now connected. And we are going through the Lanka Pay system, right? And it's completely for LKR processing. And currently, by the end of Q3 of 2021, there are 21 CAS members, right? And then ATMs, CDMs, and CRMs are all connected to CAS, right? And then we've seen a fairly good growth in the financial transactions of using CAS. Now, when we look at the transactions, I mean, there is a growth, so it's kind of growing upwards. And if you look at the fees, I think all of you know these fees now. For the charge from the fees charged from the customer of the card issue itself is 30, right? And there is a difference between the national card scheme, right? You remember the national card scheme, which I showed you in the first lecture, which is the Lanka Pay card, right? So it's routed through the Lanka Pay system, and then that means we don't have to pay any foreign charge to encourage this system. There it's a lower fee, right? So if you're going through the Lanka Pay system, you're paying like almost half the amount for a cash transaction, right? The common POS switch. So the common POS switch is there to ensure that you don't need to have this sort of multiple card machines, and everything can be routed through the common POS switch. This is mainly introduced for the Lanka Pay card, right? And they are also picking up quite a bit, right? Now we come to the main retail payment system that has been very, very successful, which is CEFs, right? So CEFs is the second phase of CEFs is common card and payment switch, right? I just remembered. So CEFs is, what is CEFs? Now, I think everyone thinks CEFs is real time, right? So CEFs provides real-time retail facilities for customers, but it is not actually real-time, right? So how CEFs works is banks have agreed to kind of loan out the money to each other during the day, and then settle each other throughout the day on a deferred net settlement, right? So to the customer, it looks like the money is settled immediately. But what actually happens is your own bank has given you the money on behalf of the other bank, right? On real time. And then later the two banks settle it out. And so this is... So why have they used that method as opposed to the Rtgs method, the actual gross method? So those thefts looks like a gross method, it is not a gross method. It's actually a deferred net settlement. So what is the reason? What could be the reason for this arrangement in thefts as opposed to the RTGS arrangement? Any ideas? Any ideas for this? This is to minimize the risk, right? Again, this is and keep the efficiency of the system. Now we know, sometimes we transfer 100 rupees, 200 rupees to our friends to make some small payment. Very small amounts we send through SEFTs. Ignoring the 30 rupees, we send it through SEFTs. Because it's still cheaper for us to send it through SEFTs than go and physically give that money, right? So now if all those little payments have to be settled on a gross basis, one by one, that's too much for the system. Because as you remember, I told this last time, this for the system, it doesn't matter whether you're transferring 1 rupee or 1,000 rupees, because those are just digits, right? So as long as the number of digits that it can type, that can be typed in, it doesn't matter to the system. For the system, what's important is the volume that's going up and down, the volume of transactions that are going up and down, because the value doesn't really affect the system, right? So even if you are sending 1 billion, or even if you are sending 550 rupees, the effect is the same. So because of that, technologically the effect is the same. So because of that, to avoid an unnecessary pressure on the system, we have this model where you have a liability management model, and banks will have sort of arrangements between they say, okay, we will put this amount through of all these banks, and everyone has it's agreed. So you can't really discriminate one bank over the other. All payment customers should be treated equally, and the money should go through real time, right? And this is very important. And this is one very important thing about a payment system, is you shouldn't go to discriminate between of course this discrimination happens, people sometimes discriminate other customers, they discriminate because these are systems, right? So they are prioritized, and you can have queues, and you can charge, you can block things, because that's the nature of digital systems. So we have to, if we see there's some anomaly in the system where it looks like someone is taking unfair advantage of the inherent capabilities of a digital system, then we have to intervene and say, no, you can't do that, right? So right now, you have to not discriminate and give everyone the same treatment. So SEFT transactions can be made through internet banking, mobile banking, kiosks, over the counter as well, and ATMs. So we've had an increase in SEFT membership. We've had an increase in SEFT membership. These are the fees, as you can see, to discourage. So part of SEFs was to discourage people from coming to the bank counter or using the ATM, right? Try and use internet and mobile banking. So that's why there is a fee change, right? But of course, it's 100 rupees. So you have a transaction limit. So the official transaction limit is a maximum of 5 million. And then, of course, CEFS is this very cool system that allows, because it's a newer system that was designed with a lot of flexibility, right? So it can connect to a lot of other systems. A lot of the innovations, actually, the innovations that we are seeing, like Lanka QR, Just Pay, LPOP, those are all through the CEFS model, right? So all these retail systems, all these real-time retail payment systems that we have today are based on CEFS. They're not based on RTGs, they're based on CEFS, because CEFS is made in a way that it can sort of grow. It can be extended to a further retail level, right? So LPOP, and of course, the main feature of CEFS is that it's an interbank transfer, right? So this sort of retail payments so far for customers was available only through cards, or you have to go and make a bank transfer, right? So now CEFS, we were able to extend this to retail payments. That is, sorry, for merchant level payments as well. Right, so all this time for merchant level payments, it was the cards. If you don't have cash, you have to use the card. But now, with the development of CEFs, you can pay directly from a bank account to merchants without having a card, right? So the transaction limit is 5 million, but for LPOP, that is Lanka Pay online payment platform, which is the payment platform for government payments. You have exceptions because of the volumes, right? So customs, you can go up to 20 billion, IRD 10 billion, and then others 250 million. So the system has made an exception for the LPOP system, right? So the number of participants at end of last year is 43, and we've seen a very high growth, over 100% growth in the volume of transactions, right? And we expect a continued high level of growth even this year as well. I think COVID really gave it a boost, but now since people are more used to it, and there's a lot of conveniences, there are a lot of other related payments. A lot of people are, a lot of companies, even schools, the places where they wanted different ways of payment have now come into the CEFS method. So there is a lot of new points of payments, uh, new places where customers can make payments. Right, so we can say a very steady, like very, very fast growth. Of course, this growth will get saturated over the years. It will start easing over the years, but not that. But there's so much more to be captured in the Sri Lankan economy at the moment. There are so many more transactions to come into the real-time CEFS model. So this also includes Lanka QR, LPOP, all these transactions are included. Yeah. And so, sorry about that. So it will ease, but not immediately. So it will continue to grow. So I think understanding CEFS and being able to guide your customers on how to use CEFS will be important in the coming years as well. Any questions on CEFS so far?
What are the main differences between SWIFT and RTG?
So the main difference is now in let me just try to show it to you. Now we yeah. So RTGS is gross settlement, right? So SEFS is not a gross settlement. Now SEFS actually, though to the customer, between the bank, SEFT is a net settlement. To the customer, it is a gross settlement, right? So in RTGS, it is a gross settlement for both. For both the customer and the bank, it is a gross settlement. In SEFs, for both, for the customer, it is a gross settlement. That is, I send one, immediately that amount goes, right? So it visually, it looks like the money has been taken and that same money has now gone to the other end, right? But in reality, what has happened is the banks have this facility where they have agreed to pay the other banks liabilities on behalf. So let's say commercial bank customer makes a SEFS transfer to an HNB customer, right? So they make the SEFS transfer, immediately the HNB customer gets the money. But it is not, but commercial bank has still not paid HNB. HNB has taken its own money and settled the HNB customer, right? And later, commercial bank will settle HNB. Now, SEFs gets settled in the RTGS system. The clearing file comes. There are 5 settlement cycles. That is 5 times a day. The clearing files come because there's a lot of volume going on, right? But in the meantime, so I have just 5 cycles starting from like 8:15 onwards up to around 4. So it gets settled 5 times a day. And what happens is, by HNB settling the customer on behalf of commercial, then commercial doesn't have to send small amounts, right, to the RTGS system, right? Do you get the point? Otherwise, RTGS will have like transactions amounting to 1 billion, 100 million, and then they will have transactions of 500 rupees also, like about like 1,000 transactions of 5,000 rupees or 500 rupees, which is too much for the system, right? The system will get blocked. So to avoid this and also give the customer the benefit of real time, the banks temporarily settle from their own money and then later they balance it out. So same if a HNB customer is paying commercial will pay from its own money and then later, like within the day, HNB will settle commercial. So for any bank that is a participant in the SEF system, that is the main difference. So SEFs actually like slips or SITs or anything is a net settlement system, right? It goes through Lanka Clear, and but it looks to the customer like it is RTGS, but it is actually not like that settlement is what is different. Did you understand the difference, Rangana?
Yes, but for the customers, they won't feel anything different between and RTGS, no?
They won't feel anything. Only thing, different banks, because even though the 5 million, we have said maximum 5 million, different banks have allowed different values, right, depending on their customer base and the amount of transactions. Some banks had put very small amounts, and we had made it compulsory for them to increase it also. Does commercial give 5 million? How much does it give per transaction?
SEFT, of course, up to 5 million.
One transaction.
Up to 5 million we allow. And so time to time we experience, not in our banks, says certain banks, is there a limit for a bank per day or something on SIFT?
Yeah, because some banks, actually we have addressed this with them, this because there is a risk profile as well, and some banks now, if you take a bigger bank with a lot of customers, actually it's also a big bank, but I'm saying there are like certain based on their risk profiles, because if they have a high like a high level of transactions and they have to keep settling from their own money, then their risk exposures are high, right? Because they have now paid out and the other banks have to pay them. So to manage that, they have set certain limits. So we we have discussed it with banks, and there are now it has been raised, but still banks have a discretion to some level, because if their risk exposures are very high and if something happens to the system, that is a bigger problem. So in some banks there are these limits, but that is base. But we strongly encourage all the banks to give the maximum to the customer, because otherwise the point is lost. In some banks, the customer can inform the bank and get the maximum. There are different arrangements, but because of the risk profiles, this it's not uniform, and we're trying to make it as uniform as possible as we go. But as more and more customers join in and the system is more fluid, that can be settled with time. But
And another thing is certain times we say about 5 million if a trans account for 20 million, we say sometimes send 5 million 4 times like. So in your opinion, we should be going for RTGS instead of SEFT, or what?
So I mean that's a very good, right? Because it's a break even point, right? So if you have to pay, customer has to pay 400 right now. So up to 400, so up to, let's say, it's 30 rupees. So up to the closest to 400, it makes sense, right, for the customer to go. That's a convenience decision. So if the customer and you all feel that you can do it like that, I mean, that is the market has that. We have to give the market some freedom as well, right?
Right now, we are almost not using RTGS, like safety is the main
Yeah,
transfer
yeah,
method. RTGS, actually, it is not being used right now.
yeah. But the thing is, as you can see, there are a lot of still like trillions of uh, rupees being transacted on RTGS. So still RTGS is not affected to the where the business of RTGS is affected. So that's fine, and the people using, because the main thing is SEFS is 24/7, right? And RTGS is not 24/7. So a customer can do this any time of the day. They otherwise, if they are doing RTGS, they have to do it before 3, right? So it's, nowadays we know there are plenty of transactions that people now they don't even think of the time. If it's under 5 million, they don't think of the time of day. Those days they will think I have to go into the bank before 3 and do it. Now they don't think like that. So there are bigger benefits to the economy by giving people that convenience. So when we are making these decisions, we have to look at all aspects, and not only the system, or we are going to lose this, because it will be one transaction, right? It will be one transaction instead of doing 4. They can do it in one. So if they prefer, okay, just do one. And then sometimes there are requirements based on the other side, they need it at one go, they won't like it in 5 installments, they will want it in one go. So in that way, depending on the customer also, it will change. And can customers initiate RTGS transactions directly online in the commercial online banking?
I think they get the option, but normally majority is using SEFT, I think.
Mm.
SEFT is there right now.
So do you see a lot of people are putting 20 million, 40 million, they're breaking it down and sending it?
No, mainly company account transfers only, which come majority transactions are below 5 million, so
Yeah, that's right.
that company transactions only we do like that.
Yeah. You break it down and send it?
Yes.
Ah, okay. So companies also saying that. Okay. Right. It all depends, right? If the customer on the other end is, because they have to reconcile 5 times, right? They are due on the receiver.
Yeah, mainly these are between their same account, same party accounts
Mm-hmm.
in two different banks, like those ones we have to talk.
Ah, right, right. So when they have 2 accounts in their for their own company.
Yes.
Right. No, but these are just. I mean, it's not fraudulent. It's not a illegal activity, right? We obviously know that can be done. It is not to prevent that, right? So our need is not to prevent that. So we have to think, because these are rare cases. When you think of the bigger number of SEFs transactions, they are mainly less than 5 million. Like most of them are, I think, much smaller. So I think, wait, we have that data here. Let me just. Maybe average per day, right? We had put it was in a. Let me see, average per day. Here we are. So when we look at average per day, so it's not so high, right? When we look at transactions divided by number of transactions divided by the um, value, the per transaction is not very high, right? It's going into about 1,000, under like 10,000 sort of thing. So in that sense, the target actually is a different market. So it doesn't matter because RTGS is not majorly affected by it still. So let's see. Because mostly on the other side, the what is it? When you take the percentage of a 20 million and then 400 rupees, it's a very small percentage, right? From the other side to the receiver, they have to reconcile 5 times. So they might not agree because from the same customer, they have to reconcile 5 times. So those issues are there. Right. Okay, LPOP, Lanka Pay online payment platform. So we've been on this digitalization of payments um, roadmap, and one of the main, so each aspect of payments have to be digitalized. So one of the other main aspects is government payments, right? So there are a lot of payments that people have to make to government institutions, and they had to either pay cash or to go and deposit in the bank. No, they actually, I think many of them had to go to the bank and submit the deposit slip, right, for a long time. And then we introduced Lanka Pay online payment platform, uh, and it uses the CEFS platform to connect customers' bank accounts and to pay these government institutions, right? So how it works is You have the LPOP system, and then the customer directly connects to the LPOP system and then pays customs, and then from the customer's account, the money directly goes to the customs account, right? So it's a fairly sort of straightforward system. I had put so these are the entities that are now in the LPOP system: customs, BOI, Inland Revenue. These are still joining in the CMC, then import export, EPF. Because they have a lot of payments that need to be paid, and IRD, now almost all the banks have connected with IRD. But the problem with LPOP is the model is such, you have to do a development. LPOP has to do a development for each new participant, so it takes a bit of time. Lanka Clear has to do a development for each new participant, so it takes a bit of time for all of them to connect. So I think if you paid your taxes, it's really easy. This is the customs model, and you can just select Sri Lanka Customs and put your relevant details, and it immediately pulls the relevant amount, right? Now, even in the tax, you can select which year, for which year or which quarter that you're paying, and then it automatically reads your TIN number, and the money goes through. So, and that's all real time. Again, any time of the day you can pay. So taxes, just before midnight you can pay your tax, not a problem. Those days you have to pay your tax before 3 because you have to get the bank slip. So before 3 you have to pay it. Now you can submit it online and pay it online as well. 11:59 you can do it, and 11:59 the money will go to the IRD, and you have paid on time. Right, next one is Just Pay. So Just Pay is, sorry, I missed a slide. Do you have customers who come to make these customs payments? Customs now you can't pay like that, you have to come through LPOP. IRD, of course, there is still the option. Do you all encourage customers to pay online, or have you all informed customers that it is possible to pay online? I think it's important to inform customers so that they know that they can use these facilities, and it's really convenient. So Just Pay. Just Pay is sort of a fintech development, and what it allows is the payment through the mobile phone, right? Now, when we go to, let's say, Keys or Pico, we can pay with our mobile app without having a QR code. Like, we can give a mobile number, and they can directly pull the money from our account, our bank account. Now, that is through Just Pay. Now, Just Pay is also what is used for Lanka QR. Now, the reason that now why Just Pay? Why can't we just use SEFTs, right? Now, in SEFTs, yes, we get the one important thing of a merchant payment system is the notification must be real time, right? It is absolutely essential that the notification is real time. That's why when we use a POS machine, immediately the slip is printed, because both the merchant and the customer has to know that the transaction is complete. There has to be some verification, and that verification comes from from some form of notification, right? Now in JustPay, that notification immediately comes as a message to the merchant. Now in SEFs, even though the SMS is supposed to be real time, sometimes there can be a delay. This in the system, JustPay is developed in a way that you will definitely get that message, right? Because it comes as a notification. So therefore, JustPay is more for payments than something like SEFs, right? So if so the SMS comes pretty fast, but sometimes there can be a delay. So there is a 50,000 limit for JustPay, and 13 licensed commercial banks and 3 specialized banks and 6 finance companies have connected to JustPay, right? And JustPay is also growing very fast. But of course, we have to know that when there is a early stages, the base figure, you can get like 200,000 because the base figure is relatively low, right? And these are, and with mobile apps being more popular now, and with all the popularization of Lanka QR, there is a lot of high growth numbers that we can see in these, right? Right. So JustPay, the concept is now the bank, the customer, right, purchases goods and services and pays through his account, right, through the merchant app, which is connected to bank A, right? Now you can use a merchant app. How do I explain? All right. So let's say I have a BOC app and I connect my commercial bank account to it, right? And then I can pay through JustPay. I can pay the merchant. Sorry, got it mixed up. That scenario is another scenario. And so basically, a customer of Bank B can pay to the merchant, and the merchant is connected to another bank, right? You can give your phone number, and then the message goes from Bank A to Bank B, from the merchant's bank to the Bank B's bank, and then the money gets pulled, right? And the customer is giving an okay to pull the money, right? That's how the payment happens. That is JustPay, and that is the extension used for Lanka QR. Now I have put here SITs. Why have I put SITs here? Okay. Right. SITs is the check imaging and truncation system, which all of you know. So it's the first, right? So the whole modernization of the central bank, it started with SITs, the check imaging system, because checks were the most popular, and actually checks is still the most popular retail payment system in Sri Lanka, right? The check imaging system really brought down the cycle down to 1 day from about 5 to 7 days, and this is why it continues to be popular, because it's almost like a real-time payment system. I mean, it's a 1 day delay, so checks are pretty reliable. Also, the chances of mistakes, if you write the check properly and all of that, are a lot less than, if you send the money to the wrong place. And also the check has a proper legal coverage through the bills of exchange, which means you can take it to court if there's a problem. Now, in terms of other digital payment systems, you can take it to court, but that whole process is sort of under the general law. How do you reverse the money? This is why we have this issue of how do you get the money back, which we need to figure out as we go and as we see how people use these systems. Checks are obviously very, very old. It's a 1927 Act, I think. So it's been around for almost 100 years. The law has been around for 100 years. So there's been plenty of time for it to be really tested out. So it was set up with the aim of reducing the time, right, for clearing and settlement of checks and avoiding physical delivery of checks, right? So it's now T+1. So all the banks have to adhere to a certain way, like in any system. Any system you have to follow the rules. If you don't follow the rules, even if one person doesn't follow the rules, it becomes a big problem in getting the system done properly. In the check system, the identified cutoff time for the participating banks is 3 p.m. And the checks are and proceeds of the cleared checks are credited to the customer's account by 2:30 the next day. Then the check transactions, now we are seeing a drop in check transactions, and this is because of the electronic other digital payment systems. And this is an important development, but we see that it's still within the past 2 years, there is about a 10 billion drop in value. But still, if we look at, so this is about going at about 30 billion. If we look at thefts, we are still at 15, like just under 16 million, right? So we have to understand that the amounts are different, and that is an important thing to take note of. Still, we can see across the board there is a drop in the use of checks, both volume and value, but there are very high. There's still a very high use of checks, right? Especially you can see for under 1 million, right? And under 11 million, right? This is very, very high use of checks in Sri Lanka. Check returns is an important thing for the check system to work. So we can see that refer to draw is generally when it's kind of like the statement to say, okay, there's no funds, right? So this refer to draw is also fairly high, but that is where you get charged. So that's the best way to sort of bring it down. The important thing, it's really important for check returns, checks not to be returned, because that is also for the credibility of the system. If people write just, false checks without having the money, then that system won't work. And that's why you get penalized for not having the checks properly funded. Then you have the dollar clearing system. I mentioned this last time as well, where the local interbank dollar clearing is routed locally. And of course, there has been a drop in the last few years, in this period, because of, I think, most likely the issue that we are having with dollars in Sri Lanka. Next, we are going to slips. So Slips again was launched in 2010, and it is for batch clearing, right? I think all of you know what Slips is, and it can go. There is no lower amount, and there is a 5 million per transaction for Slips as well. And almost everyone is a member of Slips because it's one of the oldest systems, and it's used for things like salary payments and EPF transactions. So it's fairly popular, but of course it's relatively now losing its popularity because of thefts. So this also has the forward dating facility, but thefts also has that. So because of that, I think it's kind of cannibalizing. So we can see as we go what will happen to these systems, because this is a T+1 system. So we can see as we develop, I know that some banks are completely sort of phasing out Slips. So we can see how the market goes in this one and where that will end. Then we have mobile e-money transactions. You can see in mobile e-money that, so in mobile e-money, what happens is the money goes from the mobile phone. So the customer opens a mobile money wallet with the merchant, and then they can top it up by giving money to the merchant. And there is a KYC requirement, so they have to get the ID and the relevant details. And then the merchant can execute the, and then the customer can execute the transfer to their mobile phones. Of course, we just discussed why it's not as popular as it could be, because there are so many alternative payment methods in Sri Lanka. With the evolution, they have provided a lot of new facilities, such as utility payments and institutional payments. So therefore, the mix is changing. So it was originally for money transfers between people in the city and people away, but now we see that the composition of payments have changed significantly from its originally intended use, which was money transfers, right? So it's gone for a lot of the others. The bulk is going for utility payments, interestingly. This is also, I think, a thing about the market, because utility payments actually in Sri Lanka, it's not easy to pay utility payments now. Still, you have to, if you have a payment app, it's fairly easy to make utility payments, but through the utility payment provider itself, it's not that easy. You either have to have a credit card, they still don't have LPOP connectivity. So it's not really easy. It's the mobile apps that have facilitated it. And so for the users of mobile e-payment systems, using it for utility payment really makes sense, because in Sri Lanka, that is a class of payments that has still not been, that has still not properly resolved their access points for payments very well. A lot of people I've seen a lot of people still come into places like Kargis to pay their utility bills. That is also not an optimal way to pay your bills, because you're really sort of, delaying everyone else. So that needs to be sorted, and I think that is something that is getting reflected here. Otherwise, the e-money systems are not primarily for utility payments. group.
Sorry for disturbing. Is it the practicing in Sri Lanka e-money system
Sorry?
through the mobile phones? Is it practicing in Sri Lanka?
Yes, these are the Sri Lankan data.
What is the app on using this mobile phone based on this e-money?
Yes, this is the
What is that?
Easy Cash and Mcash.
That's right. Okay.
Yeah.
Right. Thank you.
So yeah, so this is just so the data, you can find all the data from the payment service payments bulletin that we publish, right? So where is further up? So if you want, so because we have only two service providers, you don't get a lot of detailed information because there's only two service providers. But yeah, so this is basically what we publish. So if you take it in volume terms and value terms, the utility bill payments are the highest. Okay, in terms of volume, it's about 90%. So it's very interesting. It's a very interesting figure, and it reflects the market. And market in the sense it reflects how utility bill utility providers probably don't have a lot of access points because the entire, as I said, the purpose of mobile e-money transactions was not for utility bills. It was mainly for money transfers. So we can see that in Sri Lanka, because there are alternatives for money transfers, that these are mainly used for other purposes. And also in Sri Lanka, these are not very popular for several reasons. Some people don't like to go and top up with the merchant near their house. Because the whole purpose is you go to the merchant closest to your house, you don't have to go to your bank, and you go and top it up. But the problem in Sri Lanka is some people don't like to let the merchant at the shop know how much money they have earned. And sometimes when the people go to top their mobile wallets up, the merchant, they have this they owe money to the merchant. So the merchant, instead of topping their mobile wallet, the merchant will settle his debts with that money. So that those sort of things cause problems. So because there's a slight informality in that arrangement. So these are some of the practical issues that they have faced. But interestingly, these systems have evolved. So for internet transactions, now when you go on for online shopping and all of that, you can use Easy Cash, Mcash to make payments. Even on your apps, you can pay with Easy Cash, Mcash. So they have evolved. They have moved away from the very basic e-money system to a more advanced sort of mobile app, mobile digital wallet concept. Right. Sorry. So you can use this for your data if you want any data on payments in Sri Lanka and on the different payment systems. You can use it. Right. Yeah, here. Right. So we have seen a drop last year, mainly because of COVID. But it's difficult to say why. There's also been some bad rep for e-money systems. So yeah. So those are the main things that I wanted to talk about today. Lanka QR, I explained quite in detail last time. But so I think Rangana, you wanted an explanation on how exactly the payment split is being done. I will just go back and add on that. And you wanted something else was it regarding credit cards that you, Rangana, are you there on the call?
Yes.
You asked me to explain two things further. One was the Lanka QR, and another thing was the credit cards, is it?
Yeah, Lanka QR is the app-based payments, how it technically happens. That's the thing.
All right. Let me see if I have. I don't remember where I have the Lanka QR payment model. So let me, okay, let me go back to last time's, this was the lecture. So any questions before we just jump presentations? Any questions from what we discussed so far? There are some new systems that I want to explain. Actually, Lanka QR also I want to explain there. But since you had asked, I thought of explaining it here as well. So after we do fintech developments, added to this, we have some new developments such as direct debit. Do your banks facilitate direct debit? Do your banks facilitate direct debit? So direct debit is, I think we record it here still. No, that's why I didn't include it. So I will tell you what direct debit is. So here we are. So direct debit is, do you all know what direct debit is? Does anyone know direct debit, or is using direct debit for your customers? So if your bank is not here, you probably don't know. So direct debit is a pull system. So in payments, there's something called pull and push, right? So in most payment systems, the way that most of our payments happen, they are push. That is, the payer, the person who's initiated the payment, is giving the instruction to send the money from our account, right? In a direct debit, the alternative is called the pull method, right? Where you give an instruction saying, okay, I have given permission for Pico or customs or whoever to pull a specific amount from my bank. So what happens is that merchant or that institution sends a message to my bank saying, okay, this person has given the okay to pull this money and I'm pulling, right? So there is a mandate that goes there. And so that is the direct debit is that, right? You pull the money from the customer's account. And so what this says here is, make it slightly bigger so that you can see, is that customers have the convenience of giving a mandate to the bank of a third party to pull up to a certain amount of funds from their bank accounts on a given date without the customer having to initiate the payment at his end, right? So now this is being developed in Sri Lanka, right? And it's picking up fairly slowly, though also customers need to get used to it. You also need to have recurrent payments, right? These recurrent, so then like it's something like a utility bill or some standing, instead of a standing order, you can give this. Now, a standing order, we are saying on this day, send this amount to Sri Lanka Insurance, right? Instead, in direct debit, we give Sri Lanka Insurance the mandate, okay, on this day, pull this particular amount from my account, and then my bank agrees to that, right? This feature is heavily used in other countries, and that is correct, right? And would be immensely benefit organizations in their payment collections. Now, that is why direct debit is so sort of popular, because it prevents default, right? As well as make payment reconciliation more efficient. Now, from the receivers, that is from the merchants or the institution's perspective, direct debit is very good. From the customer's perspective, it's very good because it can avoid default, especially things like loan payments and all of that. It's good, especially utility payments. Now, in UK and all, it's direct debit is very popular, especially for housing loans, utility bills, even things like gym memberships, charities, anything, they will immediately give you the direct debit form, right? With the membership itself, when signing up for the gym or anything, they will give the direct debit form. And they will ask you to give the mandate so that every month they don't have to go behind you to ask for the membership. On a particular day, they will pull the money. Now, the downside of that is you need to have money in your account, right? Now, the direct debit is same as the service charges, it's at 50, right? Now, not same as, now it's a little higher, but the downside is you need to have money. Now, it is very popular in like 2012, 2013 in the UK, but with time, with the rise of the gig economy, right? Like Uber, people who do Uber style jobs, not permanent jobs. A lot of people, even now with COVID, a lot of people are leaving their jobs. They don't have permanent salaries now. They are doing their entrepreneurs, or they do sort of this earn as you go sort of jobs, and so they don't have a fixed income, right? And so when they don't have a fixed income, if the bank is pulling the money at on a fixed date and they don't have money, then that's a problem. It's kind of like a return check, right? It has that same effect. So when the bank is going to pull the money should be there, right? Otherwise, it's a problem. So this is more suitable for people who have fixed incomes or companies that have a good cash flow, to make sure that on the day that they pull, then nothing to worry. Okay, the money goes through. But if not, you shouldn't agree to a direct debit if you are not someone who has a fixed income. So with the rise of fintechs in those countries, people who had given fixed direct debit, a lot of them cancelled them. And even like small amounts, sometimes £5, they will take a direct debit mandate, because otherwise they have to chase behind the £5, right? They will just take the direct debit mandate, and I'm talking about UK, and then for as long as you have signed up for it, it just gets taken off, and then you can cancel the direct debit mandate at any time. So it's it has stronger rules because they are pulling money, right? So it's very, very important that it has very stronger rules than the pushing, because in the pushing of the money, the customer is taking the responsibility of sending the money to the right place. But here, when you're pulling, and if you pull the wrong amount, it's kind of like theft, right? So you have to be very careful in the mandate is a strong than in the other scenario. So this has been introduced by Lanka Clear, this system, and it's getting popularized, and the number of members are increasing, and you can see finance companies have joined because it makes sense for them mostly, for their customers. And I'm guessing these are also, they have a need for direct debit. Their customers are those who are likely to have this sort of recurring payments and use direct debit. Any questions on direct debit? I had not added it to the presentation because we don't really have numbers or any growth rates or anything like that, but it is a system that is happening at the moment. Okay. So if we take Lanka Clear, I'm just trying to figure out. Okay, I'm just going to go to the previous day's lecture. Trying to find the right. So Lanka Clear, how it happens is, I should have turned this into the board. So Lanka Clear, I will next time I will draw. I think I promised to draw a diagram for you last time. I will add it to the fintech developments component, right? So how it happens is Lanka Clear, you have a issuer. So the issuer is the person who issues the term issuer is not the same as the card term issuer, right? So here the issuer is the person who has given the customer the current or savings account, right? So there's a slight difference in the term issuer, right? So that is the meaning of the person issuer. And then you have the mobile app. So you can connect. It's also in the this interoperable SEF system, right? So Lanka QR is in the interoperable SEF system. So what happens is any mobile app can connect to any savings or current account, right? So it doesn't. So even if you have the commercial bank app, it doesn't need to be a commercial bank account, right? So the commercial bank account, so let's say B or C account is connected to commercial bank, and then I use that and pay a merchant who is having an HNB account, right? So HNB has given the merchant the QR code, and the money can go to either HNB. So the merchant can also connect either an HNB account or it's another bank, NDB, right? So the merchant, let's say the merchant's account is NDB, but merchant has been given a QR code by HNB. And so this is because it's all interoperable now, right? So this is to create the competition in the market, right? So if we go to Lanka Q1 and if we go to membership, we can see that there are all these merchant acquirers. So all these people who issue Lanka QR codes to merchants, right? So these are all these merchants who add who can give merchants the Lanka QR codes, right? So, and then these are the mobile applications who are capable of reading a Lanka QR code. Now it's all standardized, right? So these are directly off the bank, right? Now these are not of the bank. These are transaction acquirers, right? This is Cargills is a transaction acquirer. At the moment, Cargills is the only transaction acquirer, right? All these, everyone else, they are doing their own app, right? Everyone else has their own app, but Cargills has several, Cargills doesn't, Cargills lets fintechs come and use their bank account service. They provide fintech. So Cargills has several transaction acquirer acts. That is, the fintech is providing the app, but Cargills is providing the bank account, right? In all other cases, this directly goes into the banks and then connects through, right? So now at a high level, that the money is connected via the switch, via the SEF switch, and directly goes into the relevant bank accounts, right? So what the mobile app is doing is just connecting it and pushing it through to the right place and helping reading the Lanka QR. I will try to remember where I have a diagram of this to show you. I think I might have to draw one. So I'll just make a note of it and to get it done next time. So I think it visually might be easier for you. And then I will also show how this gets passed through, so that in that transaction, this thing. So here, just to sort of explain this to you again, what this means is Lanka Clear has a fixed fee, right? So because SEFs, Just Pay, Lanka QR, those are all systems operate, that is Just Pay, Lanka QR are subsystems of the Just Pay system. They're all connected. So Lanka QR gets this fixed amount, right? This is a fixed amount. And then this, the issuer, that is the person who has given the CASA account to the customer, gets 25%. Okay, that is fixed, right? And then the transaction acquirer, that is like Cargill's bank, they get 35%, and they can, we have told them, okay, share it with the mobile app like Direct Pay, OnePay, share it with them. And here now merchant acquirer, now this is where what is called the MDR, right? The real MDR. So the merchant acquirer is the one who has now issued the QR code to the merchant. They have the chance to decide how much are they going to charge, right? Now up to this amount, they have to charge this plus this plus this, they have to charge from the customer because it is in the regulation. But up to the remaining 40%, the remaining 39%, they can even not charge from the customer, right? So they, the merchant, they can tell the merchant, okay, we are not charging that amount. We are giving it to you free. Up to 40%, that is on the competition and all of those factors, they can decide on how much to charge. So up to so 61% or 60, yeah, it goes about 61%. They have to charge. Others, they can, on competition or discounts, they can decide how much to charge from the merchant, right? This 1% is now 0.5%, but the division is the same. Yeah, that is how the price is divided. Yeah, any questions on that one? That won't change regardless of the diagram. That is that. Any questions on that one? No. Okay. Today we have 1 hour. We can I can do sorry. We can stop, or we can start the next lesson, which is on fintech. We can take about a 10-minute break because I want to bring the diagram. I think I need to explain it with the diagram. I understand your this, and I don't have. I have a board here in the room, but I need to change the whole thing. Otherwise, I could have drawn it to you and shown. This is the problem of online. I think I have to draw a diagram and bring it. I'll do that next time. Yeah, do you all want to? I can catch up. It's fine. I can stop this lecture and we can start fresh next week, or we can start off the next lecture now and take about a 10-minute break and start that. What do you all think? I'm okay with either. It won't significantly affect either decision won't significantly affect the overall schedule.
Shall we not start next week?
Okay, we can take an early day off today and we can start next week. And if you all have any questions, just go to, I'll send this. I haven't uploaded this. I'll send this. What I'll do is I'll add the direct debit part to this slides as well, and I'll send that across. Yeah, I'll leave the Lanka the Lanka QR diagram to next time because I will have to draw that one up and share that with you. Is there anything else that you all need? Any further clarifications? Because there's so many things that I try to sort of prioritize. There are certain things that I didn't discuss, like the shared ATM switch, certain parts of CCAPs that I didn't go into detail simply because they are relatively useless. Because of that, but sometimes I feel okay, maybe because I don't want to bore you all with all the details as well. So if you all have any other questions, just you can feel free to ask. You can even ask next time. And yeah, okay, then we can stop. Right, thank you very much.
No, original cover.
Yeah, sorry. Was there a question? No?
Oh, good.
Okay.
Thank you very much.
Okay, right. Okay. Right. Thank you. Good night then.